Let's find the net liquidation value of a company through a live example. Hey guys, how's it going? It's Charlie Marr, and welcome to part 2 of finding the liquidation value of a company based off the net formula. So, last time where we left off, well, I guess to recap, in part 1, we went over the terms that you need to understand, and we went over the formulas that you need to understand to know how to find the net value of a company. So if you haven't watched that, I highly recommend you go because you have to understand all those terms and the other formulas that all come down to this net working capital. So again, just to recap, where we left off last time is with the actual formula that we use to find the net value. So NNWC, that stands for net working capital. Now to get that, we're going to grab a company's cash and short-term investments, then we're going to subtract some of the account receivables and then subtract some inventories. We're going to discount those items, add them all together, and then we're going to subtract liabilities. And that'll give us our net working capital. Then we'll divide by outstanding shares to find our per share value. So let's go ahead and go through a live example, right? So let's go ahead and go to Seeking Alpha. So there's two. I'm going to do one with Gigam. So real quick, before I get into it, you guys have seen me do a type of liquidation value on Gigam before, but you need to understand that they're different approaches and they're different formulas. So the one you've seen me do before actually uses the whole balance sheet. With this one, the net working capital and the Ben Graham method, it only focuses with current assets. So you need to understand the big difference there. So what you've seen me do before is the CMAR. It's totally different. What we're talking about in this series and in this video is the actual net value, which only focuses on current assets. And I'll go ahead and start explaining all that to you now. So we're going to go into the financials. And as someone who's searching and hunting down these net stocks, you're going to spend the majority of the time on the balance sheet when you're doing the formula. So we're going to go ahead and go into the balance sheet. Let's go ahead and start going through the formula. So the net, I'm not sure why I'm doing an M there. The net working capital equals cash and short-term investments. So that's the first thing we need to find. So we're in the balance sheet and we're going to go ahead and do the last reported. So we scroll down here, you can see here total cash and short-term investments. You can see that here it's 42.9 million. Now, what I told you guys in the last video was how they're separate, right? So if you go through here, you can see total current assets. So from this line and up, all these are the current assets, okay? If you were to scroll down, you can see how now you have total assets and you're bringing back goodwill, intangibles, you're bringing back gross property, real estate, you're bringing a lot more stuff back. We're not going to be counting this in the valuation. We're only sticking to this section and up, to total current assets and up, and then we're going to subtract all their total liabilities. So let's go ahead and get right into it. Again, total cash and short-term investments. Let's go ahead and put that down. That's 42.9 million. So 42.9 million. Now we're going to add, account receivables. But we're going to do a discounted item. We're going to discount that, right? So if we scroll here, receivables, account receivables, other receivables, total receivables, we're going to do 75 of that, 75.75. Remember the formula. So that is 0.75 times 300,000 times 300,000. And I'm not just going to go by decimals and do that whole rounding down. I'm going to do the whole number so it'll be easier to understand. So that is $225,000. Let me make sure I did my math right there. That's 300 times 0.75. Yeah, 225,000. So we're going to add that here. Let's go back to here. Plus 225,000 plus, and this is half of inventory, so 0.5. I usually just divide. It's just easier, same thing. So we scroll down, let's see if they have any inventory. In this case, this company does not have any inventory, so there's actually just nothing to do there. Let me just make sure I don't miss it. Restricted cash, no. Other current assets, no. That's too small too. That's only 200,000 total current assets. So in this case, this company does not have any inventory. So we're not going to subtract anything. We're pretty much done with it. But if we go to a company like Emerson Radio, this is another stock that we can go over this example as well. Let's see if this company has inventory, so I can show you how it looks and where it is. Yeah, so this company has inventory. So you would just divide 2.9. You would get half of that. So we'll do this example later. This is why I have it open. So that's pretty much it for that end. We're going to add these up. Let me grab my phone here. Okay, so we're going to, that's 42. I guess I can do it here for you guys. You guys can actually see this. That's 42, 9 million plus 225. I mean, this is already discounted. Keep that in mind. And that comes out to 43,125. 43,125. So that's that. Let's disregard that. So that's what this comes out to, right? Well, now we need to subtract total liabilities from this. And remember, this is all we're focused on. So we go back on here, we're grabbing the total short-term, investments, total receivables, and that's it. We're not really going to mess with anything else. Plus, all these is way too small to even mess with anyway. And on top of that, we're going to, but anyways, this is just the net working capital. So, and now we're going to subtract total liabilities. So we're just grabbing those two numbers. And then with what we grabbed, the possible account receivables that will get paid and all their cash in hand, we're gonna pay back all their debt and all their liabilities and see how much is left over. So if we scroll down, you'll see here total liabilities, that's 5.1 million. So here it is, minus 5.1 million, so 5.1 million. That leaves us with a net working capital of 38,025. So let's go ahead and go back, and that is 38,025. 38,025,000. That is our net working capital. This is a live example. That's how much money is left over if we just grab their cash, discount some of their account receivables, and pay back all their debt and all their total liabilities. Now, let's go ahead and compare that to the company's current market cap. So let's go ahead and click back here. Let's go all the way to summary. And the stock is currently trading at a market cap of 24.87 million. So that's its current market cap, 24.87. Current market cap is 24,087,000. So if you look at these numbers, is it undervalued? I mean, yes, its net working capital value is 38 million and it's currently at 24, let's just say 25 million. Okay, so what do you want to do further? Let's grab the per share value. So to do that, we just have to divide by outstanding shares. So we're going to grab this number and divide by outstanding shares. So we're going to go back into their financials. We're going to go to their balance sheet. We're going to scroll all the way down and we're going to see total shares outstanding, total common shares outstanding, total shares outstanding on filing date. So 11.11. So let's go ahead and divide this by 11.11 million. 1, 2. And that gives us a net working capital per share of $3.43 rounded. So for 3.43. And let's just round down, let's always be more conservative. So instead of rounding up to 3, let's just stick to 3.42. So 3.42. That's the net working capital value of Gigam. Now, let's see where it's currently trading at per share. So it's currently at $2.25. And it's currently trading at $2.25. So is this stock undervalued? Yes. Is this stock trading below net? Yes, it is. Now, of course, what Graham did was he used a margin of safety, and the way he did it was he wanted it to be 1/3 of the value, and he just did times 0.666. So we're going to grab that 3.42. Let's just, I guess, grab it. It's already on here. Times 0.6666. I mean, you can add any amount. I just could throw in any amount. It's not going to make a difference. So this stock is a buy if and only it's trading at or below 2.28. So it's a buy under $2. Oh, I did that backwards. $2.28. Is this stock, Gigam, currently trading below net? Yes. Is it under its buy price? Yes, it is. Here it is. It's at 225. So this stock, according to Ben Graham, is a buy, and it's a net stock. So what he would do is he would grab, I don't know, a lot of these stock, dozens of these stock, and he would buy them all. And then his portfolio over time would just, would outperform the market according to him. So you can grab, obviously, you can kind of do the math and figure out what that difference is. Let me see if I can figure that out real quick on my phone here, because I'm curious to know what that difference is. And then we'll do one more with we'll do another one with a stock that might not work. So now that we saw one that would work. So let me just go to percentage calculator, because I get calculating percentage calculators. So from 2.25, if it went back to its net working capital per share value, it would be 3.42. That is a 52% return on your investment. And obviously the lower a stock like this is, the better it is. And keep in mind, remember, we didn't use all the other assets. We didn't include everything. All we did was grab their cash, account receivables. They had no inventory. We deducted, we discounted that, and then we subtracted all their liabilities, and that's how much money was, this is how much its net working capital value was. And then on top of that, we did a margin of safety. We gave enough room for error. A third of it practically, and it's a buy under 228, and it's currently at 225. So this is a classic cigar butt stock. It's a classic Ben Graham stock. I always call him Graham. People laugh at me. Ben Graham stock. Let's go ahead and go over one more example, and let's see if we can kind of knock that one out a lot quicker. And you know what? No, let's just finish the video at this, because it's I don't want to make it too long. But this is a live example. I'll make another video maybe of a part 2. But anyways, I'll see you guys on the next one. So in the next video, we're going to go over some things to avoid. We're going to go over a small criteria of stocks that you do not want to do this formula with. And right, if you see this, you do not even bother using this formula. And if you do the math, because it qualifies, I'm going to show you some things to avoid, to stay away from a possible value trap. And then in the fourth video, we'll go over some scanners and filters that you can do, so you could narrow down your list of all the stocks out there, and you'll narrow it down to all the stocks that could possibly be trading below net working capital or be a net stock. And you don't have to go through, you'll have a smaller stocks, and then you get to do the math over all them. Now, before I end the video, I do want to mention that this is one of the coolest things about being in the Investors Club with Charlie Marr here, because we have a bot that automatically does this for us. So we don't have to physically do the math. You can do your filters, you can come across 20 stocks, but instead of having to do the math one by one, we have a bot that you just input a command, you type in the ticker, and it gives you the answer right away along with more statistics. So you get the buy price, you get the fair value based on the net, and then you get a bunch of other statistics. And it's super cool, because if you have 20 stocks, you just throw them in that bot, and he's just giving you the answer right away. You don't have to do the math anymore. So it's really cool. Plus you have the intrinsic value, and you have the group in general, and like all these other videos and everyone helping. If you're running through a stock and you need help, there's so many people there. If I'm there, other people are there, it's the Value Investors Club, it's like a lounge. It's awesome. And then other people are sharing their ideas, their stocks that they like, their net stocks. So it's an awesome community. Make sure to join that. It's just charliemarr with 2rs.com. I'm sure you'll see the site somewhere around. And if it's not up anymore, well, I mean, it's closed, but it should be up and running by the time you're watching this video, hopefully. Anyways, I will see you guys on the next video.